Hello, financial fans. 2022 is shaping up as a year that will have a lot of bad news potential. And among the bad news headlines that we will see that will affect the stock market, of course, maybe 4 interest rate hikes during the year 2022, maybe only 3. If it's only 3, then the fact that they don't do it a 4th time would make the market go up a little bit toward the end of the year perhaps, but we shall wait and see what happens on that front. Meanwhile, Ukraine, Russia is becoming an issue that will have an effect, especially on defense stocks. And same with Taiwan and China. There's plenty of negative news available for the future of 2022, and COVID has the potential of being a news item that could turn out to have a good headline at some point, maybe a couple months or 6 months away, when it might cease to be a problem. Some great cure or whatever will come along. But with all that in mind, about a week ago I had a couple of percent gain in my portfolio, and today my portfolio for the year of 2022 is down 4.02%, and I'm not selling anything. I think this is a time to hold onto my stocks, and I do have a lot of stocks that pay good dividends, so I will just think of that as a blessing. I'm in pretty good shape compared to other people, and probably by the end of the year I'll be up a percent or two. I bought 2 stocks during the past 7 days. I bought BTI for $42.68, and I bought PBR for $12.70. Both of those purchases taking place on January 21st of 2022, so I am still buying as the market goes down. And other than that, not a lot to say. I'll recommend some stocks that we can look at that might be having less problems in 2022 than other stocks. And let's begin with a stock we all know about, and it seems to be selling at a bit of a discount. It seems to be undervalued right now. Let's take a look at the numbers for Facebook. And we see that Facebook has put on a new face. They are now Meta Platforms Incorporated. And the closing price last trade during the trading hours, $303.17. But after hours it did go down to $302.43 per share. Column on the left, 2/3 of the way down, 52-week range. We see that the low for Meta Platforms low was $253.50 per share, and the high in the last 52 weeks, at some point it reached $384.33 per share. So it is now nearer to the low for the past 52 weeks than it is to the high. But this is Facebook, and we look down a little further in that column on the left, see the average volume, 22 million shares trade every day. And all the way down that first column on the left, undervalued. That's what the analysts say about Facebook or Meta Platforms. And in the column in the middle, we see the third item down, PE ratio for Facebook is 21.7. Now that's higher than I usually like to allow in my stock portfolio, but this is Facebook, one of the biggies. They have a lot of people checking on their status each day and leaving likes and dislikes and so on. And the PE ratio at 2170 is still way below the average. If you took all the stocks in the New York Stock Exchange or NASDAQ and put them all together, that 2170 would not seem to be too high at all. Go down a little bit further, we see the forward dividend and yield. There is no dividend. And at the bottom of that middle column, the 1-year target estimate, $401.59. That seems like a reasonable move from where it is at this time. Next, we'll take a look at Bank of America. BAC is the symbol. And BAC, 2/3 of the way down on the left-hand column, 52-week range, $29.57 to $50.08. So it's closer to the high than it is to the low. It's got plenty of headroom, and this stock probably will be moving up, but I'm not a financial advisor, and any money that you invest in the stock market can be lost. And near the bottom of that column on the left, you see the average volume, 48 million, almost 50 million shares trade every day. So this is a very popular stock. And all the way down we see undervalued. The people who look at these stocks very, very carefully think that Bank of America BAC is undervalued at this time, and I agree, of course. And the PE ratio, third item down, middle column, 12.5, and again that's higher than I usually put in my portfolio, but this is Bank of America. This is a big player, and the interest rate increases could affect this stock favorably. The forward dividend and yield, about 2/3 of the way down the middle column, forward dividend and yield 1.87, about 2% is what you get for holding on to it. And I don't recommend selling stocks too soon in this year of 2022. Hold on, maybe some good news will be coming around the corner at some time, and sell high. The 1-year target estimate for this stock, BAC, 1-year estimate, $51.36. So that indeed would be a nice move upwards if that happens. Next we look at a scientific stock here, Gilead Sciences Incorporated, and it was up on the last trading day of the year, and then or the last trading day this past week, and for since the market close it's down a tiny bit to $68.30 per share. And we look at the column on the left, 2/3 of the way down, 52-week range, $61.39 to $74.12. So this one looks like it's pretty well in the middle there. The average volume, 7.5 million shares trade every day, and the value meter says that this one is undervalued. Gilead Sciences is undervalued, and I of course agree with this, and the PE ratio is 11.77 for Gilead Sciences. And some of the companies in the various fields of biotechnology could have a good year. I have no idea what's going to happen in the future and what's going to happen with COVID or whatever, but hopefully things will get better, and if they do get better, this company will benefit. Gilead Sciences, GILD is the symbol. The forward dividend and yield, you get 4% plus for holding on to the stock. 1-year target estimate, $77, and that would of course be a big move upward. Now we'll look at the fourth stock. It's actually an ETF, exchange traded fund. It trades like a stock. This is Vanguard High Dividend Yield Index Fund. If you're holding on to stocks right now, it'd probably be wise to hold on to stocks that have a high dividend for this year 2022, and just hold on to them and get your dividend checks. And this particular ETF, exchange traded fund, we'll look at two things. We'll look in the column in the middle, 2/3 of the way down, YTD, year to date. The year to date daily total return. This is January, and it's already up 2%, 2.19%. That's very good in this market, as you are quite aware. For anything to have better than 2%. And Look further down, the expense ratio, 0.06, almost non-existent. Very, very low cost entry there. Expense ratio 0.06%. So this is one to look at, and it's an easy way to get benefits of high dividends, which will probably be in favor this year, 2022. And I thank you very much for watching.